The Icons of Real Estate podcast. Are you ready to learn the proven money-making secrets from top-producing Icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business. From $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Arter SEO.
Welcome to the Icons of Real Estate. I'm Tim Calloway. We have a very special guest for you today, Sief Khafagi. He is the founder of Techvestor, which allows investors to passively invest in short-term rentals, things like Airbnb. Sief, how are you?
I'm good, Tim. Thanks for having me.
Yeah, definitely. So how did you come up with this idea and how did you get started?
Yeah, so Sabrina and I were the two co-founders. We were working in tech back in the day. She's ex-Apple, I'm ex-Facebook, and we used to travel quite a bit for our roles. And part of our jobs were oftentimes staying in cities for longer than a day or two, and oftentimes we stayed in Airbnbs. The experience was pretty shitty, and the design was less than appealing.
Right.
Probably 8 times out of 10, but we needed the amenities, the kitchen, the size, the comfort,
Right.
all that kind of good stuff. And, we decided to build our own portfolio and, becoming from this privileged background of technology, we entered an archaic real estate space that felt like it was back in the 60s. And someone asked me to fax something over and I was like, I don't know what that is.
Right. It sounds slow and noisy.
Very slow, very noisy, and like huge pet peeves there. And the title companies hear it from me often.
Yeah.
But we wanted to buy a few short-term rentals ourselves. The number actually was 8, and we didn't want to do all this manual work of finding them and figuring out where to buy. So we built software. Actually, we started as a software company that we wanted to, use our own product to find our own short-term rentals, and we helped a few people buy them. Using our software because everyone loved our software. That was the feedback, but no one wanted to use it themselves. They were like, hey, you go do this and do all the work and I'll give you money. And we ended up starting our fund. And today we are $20 million in and actually 61 properties, I believe, this year.
Wow.
On short-term rentals. And we're trying to make short-term rentals as passive as possible. For those that are interested in kind of getting into that space.
Yeah, I mean that takes a lot of work out of it for the investor in general, who might go out and buy a property and try to Airbnb it themselves or rent it out themselves or whatever it might be. So why did you choose short-term rentals?
Yeah, we saw really an itch personally. Like, we experienced the lack of competition because we stayed in all these people's homes and you could clearly tell they were never really in the hospitality space. They didn't really care for the design or the aesthetic or the feeling of being in that space. And when we learned more about the industry, as we were kind of, we were at a time strapped with more cash than what we could as two young single people in the industry back then, we decided to look into short-term rentals, and we found that 98% of the properties were ran by mom and pops. While if you compare that to almost any other sector of real estate, it's mostly all institutional, right? Single family, people believe today is institutional. It's not institutionalized just yet. There are significantly more institutions going into SFR for sure, but STR, no big company, Blackstone, BlackRock has entered the space predominantly because it's fragmented. You can't just take 100 million and drop it into a building. It just doesn't work like that. Right. And then single families are a lot easier to scale on the long-term rental side because you can just buy them, long-term lease them, and not deal with the day-to-day operations as much, right? Or offload it to a typical PM. With short-term rentals, you got to factor in the design, the aesthetic, the dynamic pricing, the daily operations, hospitality, technology, everything at the end of the day. And really what we found is institutions won't touch it. So we decided to institutionalize the space itself because we saw a lack of competition and just really low hanging fruit to kind of go in, generate really great alpha yield in that space. And what we've seen is institutions have reached out to us in droves saying, hey, we will buy this portfolio from you if and when you're interested, because they don't want to do the work, but they want the yield.
Right.
right? So they're like, give us a call when you're ready, and we're excited to see where that kind of takes us.
Yeah, that's fantastic. Now, how do you parse properties? How do you decide, where, when, the whole nine yards of investing in short-term rentals?
Yeah, so our software really is all about data, right? And about discovery. So our acquisition software and John, who's our head of data, Taylor, who's our head of acquisition, Austin, who's our head of revenue, we're all kind of collectively thinking about acquisition. Um, we identify first on a global basis, right? So for us, that's the US, right, for
Right.
today. And then from there, we kind of take it a next step lower, meaning like which states are friendly for short-term rentals and typically like hot markets or emerging markets based on data and trends. And then from there, once we've identified a location, take, for example, Scottsdale, Arizona, we can actually drill down to what we call the golden circle. That's
Mhm.
down to the zip code, down to the neighborhood, down to the type of asset to own in that area. For example, in Scottsdale, it'll be rare for us to ever own a 3-bedroom home,
Right.
right? Only thing we'll really buy is a 4 and ideally a 5-bedroom or larger with a pool, typically on a larger lot. And we know this because of the data, and also ideally we'll have two living rooms
Right.
or 2 living spaces, because the data suggests that these types of properties make the best investment in that location of a market. And so for us, we're not trying to reinvent the wheel here. We're looking at and identifying what's the best performing asset in a market, buy that asset, operate it significantly better with technology and automation, and then insert humans where needed, and then deliver a really great passive experience to our community. And so it's kind of the Burger King methodology, right? Back in the day with what they did with McDonald's, right?
Right.
McDonald's pops up shop, on a corner. What does Burger King do? They're like, I'm going to
Right
take the
down the
opposite
street.
corner.
Yeah.
Yep, exactly, right. And so the data is already existing. It's really about parsing it. And that's why John, who's our head of data, right, a big role that he plays is really understanding this data, because there's no really great tools today that allow you to really dissect the quality and efficacy of that data, right? There's tools like AirDNA, which, Scott's fantastic over there. There's tools like All the Rooms and Rabu and all these types of things, but
Right.
no tool really tells you how the data works on the back end. And so that's really our job to dissect and figure out.
Nice. So let's look at the flip side of how you find, your properties. How are you finding investors? I mean, you just doing a bunch of podcasts, or I mean, are you reaching out? You talked about institutions. How are you actually finding your investors?
Yeah, so I think what we're doing is somewhat unique in many ways. I think in the syndication space, right? Because typically you're seeing multifamily, commercial,
Right.
office, that type of stuff being syndicated storage, and what you're not seeing is a lot of short-term rental funds or these types of investments. And you're not going to syndicate a single family home, right? It's
Right.
just unreasonable to kind of do that. So what we found is a lot of success with other multifamily operators and kind of people who are looking to place capital in that sense. We certainly are, we have a brand out there. We're fairly active on social media. Yes, we do podcasts like this.
Right.
And, we're really about educating, right? So short-term rentals is a new thing. They've been around for a long time, over 30 plus years, but Airbnb really put them on the map. And then investing in them is a whole new world, right? Regulation, risk, interest risk, the market itself, today's market and macro, right? In addition to
Right.
operating them, there's a lot of education, and that's really where we focus, is all about talking about short-term rentals, why we believe it's the next great asset class to own, but also like how things work. And I think a lot of that generally attracts interest within people with capital, right? Who are like, this is
Right.
interesting, right? You don't really see this every day. I want to add this kind of cash yield to my portfolio.
Very nice. So let's talk about, if I had a wand, right, and I could grant you a wish to solve any problem that you have in this space, and with Techvestor, what could I solve for you?
I think the obvious answer here that many would actually say would be regulation, right? Imagine any possible property in the world could be a legal and viable short-term rental. And I think that's an amazing wish to have. But I also genuinely understand why we have regulations in place, right? Short-term rentals, I think, sometimes get a bad rap for disturbing communities and, taking away affordable housing and those types of things. So I do think some element of regulation is important in making sure that we're not disproportionately affecting communities. And that's a big deal to us, right? Is making sure that we actually add value to communities, welcome guests that respect communities that they're staying in, all those types of things. But our biggest wish, honestly, is really about bigger and better infrastructure, right? So today we're in 8 states, and to get to 8 states in a year or so is not a short feat. And we went through our own share of mistakes and hurdles. And if we could scale, overnight in all 50 states with great infrastructure, then I really think that would be the biggest competitive advantage that we could have.
Gotcha. Are you working with, I mean, is it primarily accredited investors? Is there minimums?
Yeah, we do work with accredited exclusively. And obviously, like most good syndicators, I will mention that this is not an offer of securities and
Right.
all those disclaimers, and make sure that you're qualified to invest and understand the risks ever. But for us, it's a 25K minimum. We work exclusively with accredited investors, and that's kind of where we've landed today.
Nice. So let's put our prognostication hats on, and I won't ask you. Well, I'll ask you, what's the 1, 3, and 5 year plan right now? This is a hot. To me, what you're doing is fantastic. I love it. I think it's a space that I don't ever hear about, and I've been investing since '91. To tell you my age, and so what's the 1, 3, and 5 year plan for growth model for you?
Yeah, I think we're one of the few companies in the country that's bridging this kind of like half tech startup mixed with half private equity kind of vibe, right? I think you typically see like one or the other in the space. And so for us in the next year, our goal is to continue educating and really scale Fund 1 and Fund 2, right? We'll launch Fund 2 early next year, and really continue to prove out the asset and really start getting what we call as a T12 in the industry, right, of good stabilized revenue. And we're coming out the gate, hitting really great numbers thus far. It's going to be important for us to kind of continue that going, regardless of a macro environment or macro fears. I think 3 years from now, the idea is to start actually looking at disposition. So typically we run things on a 5-year horizon. But once we have about a T24, you'll want to start looking at disposition and, capitalizing on that equity and rolling that portfolio up to a larger group, right? Family office, private equity, et cetera, who wants to buy the stabilized yield. 5 years from now, I imagine we'll hopefully have anywhere between 1 or 2 exits under our belt from a portfolio basis, and really just kind of keep humming, right? Building technology that allows us to have a competitive edge. My team will tell you that I talk about 3 things quite a bit, and that's team, technology, and traction. I genuinely believe we have the best team in the space to operate and execute this vision of short-term rentals and making it an institutional asset class. This one that's data backed and one that actually can go out and actually get the work done and execute this business plan. Secondly is technology, and continue to build out tools and resources that we don't believe exist on the market or give us some sort of a competitive edge to execute and operate. For example, we generate 42% more revenue and 52% more occupancy than our competitors in our markets today. Part of that is because of our pricing strategy, or our ingrown tools, and our understanding of the local market and amenities and all these types of things, right? All that paired with social presence and all these things that we kind of do. So kind of really continuing to build that up. And lastly, it's really to make sure that we're leaders in the conversation around traction. It's an early innings of short-term rentals, in my opinion, becoming an institutionalized asset class. And it could be 2 years, it could be 10 years, but we believe sooner or later, short-term rentals will become institutionalized because people are chasing cash flow and they're chasing yield. And the cash flow you can get with short-term rentals when they're professionally operated the way that we believe we can operate them and the way that we have, it's really hard to beat at full stabilization. And so because of that, we believe it's more of a yield play with massive upside in terms of equity growth because of the compressed cap rates that we can sell in the future. But that's disproven, right? We don't know yet. It's not like it's multifamily where it trades at a general cap rate depending on the MSA, right? And the type of class that it is. But in short-term rentals, you don't really know that yet, right? We've done it 7 times and sold anywhere between a 5.5 and a 6.5 cap, right? Which is great.
Yeah, that's great.
It's fantastic. We've generated about a 38% weighted IRR on those exited assets. But it's going to be, can you do that at scale? Can you sell 250 properties at those types of numbers and metrics and what kind of has to happen to get there. So I think we have massive upside there, but we're going to have really great consistent cash flow year over year is the idea.
Was that over 1 year on the ROI, the 38?
No, we were super early. So we bought those properties, designed them, furnished them, and actually sold some of them even on projected yield, right? Let alone actual yield, to really prove out that people would buy single family short-term rentals based on some sort of a cap, right? Based on revenue rather than value, which is, appraisals and comps and all that kind of good stuff.
I think you're just bragging now, Steve.
Hey, we're just trying to prove the market, right? And we always joke we're never trying to set the market,
right?
But we certainly want to exploit it.
There you go. Nothing wrong with that at all. So if I'm an accredited investor and I want to find out how to get involved in this passive income or this passive investment, how do I find you, or how do I find your fund?
Yeah, you can find us at techvestor.com in terms of setting up a conversation if that's what you're looking for. And again, not a solicitation in any means,
sure.
But please do your due diligence on any investment you do make. We're all about education. So if you have any questions, please ask. Whether you invest or you don't is the last of our concerns. But get educated on the space. Support your short-term rental community. I think there's a lot of a bad rap that kind of goes around in that gist. But a lot of good people trying to do good things with a few bad apples here and there.
Oh, of course. And that's anywhere you go in any industry, but you're exactly right. Well, see, this is the part of the show, I always say I'm kind of like the old DJ, and you're the hit song of the week. So, I'm spinning records here. I want to give you the last out. Anything you want to discuss that maybe we didn't cover, or maybe what's your favorite animal shelter, whatever it might be. I'm going to give you the last word.
No, I'm good. I think I want to give a shout out to my team here. I think a lot of people ask me what one of the biggest things I'm proudest of accomplishing thus far in the business. And I genuinely think we have the best team to execute, right? I think we'll see more short-term rental funds and operators pop up in the space. I genuinely believe we have the best team to actually get this done, right? People with STR specific knowledge, tech backgrounds, real estate backgrounds, finance backgrounds. More importantly, we're all operators. Our entire management team, we're operators of short-term rentals. And I think that gives us an incredible lens of success that other people typically will try to emulate, but don't actually have. So shout out to my team. And if there's one reason for you guys to consider short-term rentals or, working with us in any capacity, the team is a big part of it.
Nice. I like someone who can shout back out to the team. That rarely happens.
It should be the most important thing.
Exactly. Steve, thanks so much. Techvestor, check it out. Thanks for being on the show. I'd like to get back with you maybe 3, 6, 9 months and see where we're at then.
Awesome. Thanks so much, Tim. Appreciate the time.
Have a great one.
Take care.